my name is Maurice Washington. I want to welcome everybody to another episode of Executive Talk. Those who are watching live or those that are listening later on our podcast, I want to thank you so much for joining us. In today's segment, we're going to talk about actual versus mileage. This is the time of the year when everybody's starting to look at their tax returns and look at their taxes as a whole and starting to write down deductions and so on and so forth. And actual versus mileage is one of those. So in today's episode, we're going to have Victoria Smith, owner and operator of Victory Accounting, with us today. So let's go ahead and bring her to the stage. How you doing, Victoria?
I'm doing great. How are you doing, Maurice?
I'm doing fantastic. Thank you so much for being here. How has your year been so far?
It's doing great. So I'm ready for tax season.
Yes, here it is, right around the corner.
Right around
Speaking
the corner.
of tax, yes, that's right. So speaking of tax season, actual versus mileage, how big of an issue is this when you're doing your taxes?
Right. So once you pick whether you want to use actual expenses or mileage, you have to stick with it for the amount of time that you are using that vehicle and the business. So it can be a big deal, especially like long term, depending on what you've got going on and how you're running your business. It can make a big difference.
Sure. All right, so let's talk about that. Let's talk about the difference, and let's talk about mileage, because that's one people are typically used to. They see this often. And in general, when you keep track of all the business miles you drive, one thing I would like to ask you specifically, is this a task that do you find business owners good at keeping track of this?
No, a lot of business owners have a hard time keeping track of their mileage. My biggest recommendation is to either keep a logbook in your car that you write everything down in, or have an app that you keep track of everything. Also, a calendar can work pretty good if you write down all of your appointments and then make sure that you're going back and keeping track of the mileage that you're driving for those appointments. So,
Right.
but an app can be really helpful.
Oh, an app can be helpful? Okay. All right. So let me ask you this question, because this is something that I'm sure has changed. Because over time, when you think about mileage, back in the day, I don't know, maybe in the early 2000s, a little bit before then, people used to drive everywhere to their appointments for their business. Then we got to the point where COVID hit. And it looked like, and also between technology and COVID hitting, it has changed the landscape as to how business is being done. Now, with that being said, when we come to these type of years, are you seeing people using less mileage for their business at this stage, or is this still something even worthy of writing off?
Right. So it's always worth taking as many expenses as you can, especially if you are driving those miles. It really depends on the business that you have. Nowadays, we have Amazon who delivers straight to our doors, so we may not have to run out for supplies or anything as often as we used to.
Exactly.
But if you're driving for, like, let's say you're a home inspector and you're out running around doing home inspections, your vehicle expenses really haven't changed because you're still driving. So it just kind of varies based on your business.
That's fair. All right. Well, let's bring this up, because I know, again, when we're talking about how many deductions you can have, you're saying that the mileage rate is set by the IRS, and the mileage rate is currently at 65.5 cents per mile.
Yeah.
How does that work out in the end typically?
Yeah, that's for 2023.
Okay.
Every year, the IRS changes the mileage rate based on what the economics are of that year. Back in 2022, when gas prices skyrocketed, they actually changed the mileage rate for halfway through the year to help compensate for that change in the rates. So this can affect business owners, but if you've already decided to take mileage, then you're kind of stuck with whatever the IRS sets as the mileage guide.
Gotcha. Does this seem to fluctuate year after year? I mean, last year, over the last couple of years, have you seen this percentage or this since increase or decrease?
So it just varies year to year. Sometimes it goes up a few cents, sometimes it drops a few cents. So it kind of just really varies on what the IRS thinks the economy is going to do.
That's fair. All right. So then 2024 mileage rate has yet to be announced. So when does that typically get announced? Is that something that we see in January, or how does that tend to work?
Here in the next couple days or so.
Okay.
the IRS is pretty good about getting it out. It might be out right now. I just haven't checked in the last couple days if they've set that yet or not. So it should be coming out pretty soon here.
That's fair. All right. So you can also claim parking fees and tolls. So I know typically, I mean, obviously here in Colorado, I think this is probably a nationwide thing, but tolls is now a big deal. And so parking fees, is that when you're talking about parking downtown and so on and so forth?
Right. So if you have to pay to park somewhere and you're going somewhere to get like business supplies or you're meeting a client or something like that and you have to pay for parking, you can write that off. If you're traveling and going a certain route to see a client and it's easier to take a toll roll, you can write that off as well, as long as you're traveling for business.
Gotcha. And so you brought this up earlier, and I think it's important for us to resurface the conversation. So mileage log can be kept by hand or by app. So this is one of those things where, and let me go ahead and move this off the screen because I know this is where it's one of the most tedious things you can do as far as keeping track of this. And obviously it's necessary. And is this something that first of all, is there something that the IRS can audit and see if this is real?
Yeah, the IRS can ask for your mileage log at any time if you're keeping track of your expenses by mileage. So it's definitely something that you want to have. If you have to go back in time and kind of start writing everything down based on your calendar, I do recommend actually going back and doing that. So you have something to prove. Usually I like to put in the miles I drove and what the purpose of the trip was for, so that way I have a better idea. And if I'm ever asked, well, was this business? I have, already the explanation, because when we get so far down the road, you don't remember everything.
That's right. That's right. Now, this is another important aspect when it comes to mileage. If you work from home, and there's a specific way on what you can track as mileage. How does that work? Because I know because I think it's different if you work from the office space. So if I go from home to the office space, can I write that off?
No.
As mileage? No.
If you have an office space, you can't write off your mileage from home to the office. That's not considered a business deduction. That's considered going to work. Now, if your office is in your house and you leave your house to go do business work, then you can write that off. You can't, if you have both a home office and a physical location, the IRS automatically counts that physical location. You can't do anything from your home out. The best idea is that if you are having to travel past the office, you stop by the office first and then go to wherever you're going.
Got it. Okay. And then that's when you can start tracking.
And that's when you can start tracking. Yes.
Got it. All right. And that's a very important thing for everybody to distinguish. I want to make sure everybody gets that. This is another thing that you're talking about. This is the actual. Yeah, I think what's so dynamic about this show, it sounds mundane just based off of actual mileage, whatever. But there's a huge difference when you hear this. So actual vehicle expenses is having a full-time vehicle has to make sense for your business. Go ahead and tell us what that means in your world.
Right. So again, we'll use the home inspector. Home inspectors are driving around all the time. So usually they have a full-time vehicle for their job. They're carrying ladders, they're carrying equipment, they've got all these supplies that they've got to take with them. So it makes sense for their business to have a full-time vehicle. Now, if let's say you're a dentist, you're probably not traveling a whole lot unless you have a traveling dental practice and you're going around to different places. Like, I know that there's some dentist practices that go to schools to help kids. So that would be one way that maybe they could do it. But otherwise, usually a dentist isn't going to have a full-time vehicle on their books. So it's got to make sense for your business. The other thing is that if you're not using that vehicle for, I would say 90 to 100% business, and that's my personal take on it, then you should probably maybe be doing mileage. That might be easier.
Okay. That makes sense. All right. So do you find those business professionals that are out there that, let's say they're doing well in their business, they have some disposable income to have multiple vehicles.
Right.
Is that a place where they can start claiming actual on all these other multiple vehicles that they have?
Yeah. So when you hit the limit of 5 vehicles, You have to
Oh,
actual expenses.
got it.
You no
Okay.
longer have the choice to take mileage. So that's one of those things that you have to be aware of.
Makes sense. All right. Well, let's talk about some other points that you have. So the vehicles should be in between 90 to 100% business use. How can they actually, how are the IRS going to pay attention to that? Are you talking about as far as if you're going to claim actual, that vehicle, if you're going to claim actual, it should just be in line with 90 to 100% of your use? Is that what you're suggesting here?
Yeah, that's my suggestion. There's
Okay.
nothing in rules that it has to be that, but that's always my suggestion for my clients is that we're making sure that that vehicle is mostly for the business.
Got it.
I have had clients that have had IRS agents show up at their house to check to see if that vehicle was a business vehicle.
Oh,
So
wow.
it's not it's not completely out of the realm that the IRS could pop in and check on that.
Ding dong. Just want to check out some things. All right, that's fair. Well, then let's talk about this because I know this is another new change within society, and that's electric cars, electric vehicles. And the thought process behind electric vehicles is absolutely makes a lot of sense. Go a long distance without gas and so on and so forth. Obviously, it's electric, no need for gas, but there's no fuel costs. That's number one. And also, if under warranty, no repair costs. Talk to us a little bit further about this.
Right. So if you're buying an electric car brand new, usually they come with a great warranty. So your repair costs are going to be very low. You're not going to have fuel costs because you're charging it at home or, around. So that really negates a lot of those actual expenses that we would normally take. So normally I would typically recommend doing mileage for electrical vehicles.
Mm,
Obviously, we'd want to break it down and consider both of them because if you do actual, you can depreciate the vehicle. So there could be some cost benefits to doing actual, but in long term, it'd probably be better off doing mileage, just depending on how long you plan on keeping the car and everything. So it's always a good idea to keep track of both for the first year and kind of
right.
see where you think everything's going to end up.
Okay. But on the first year, you're typically with your electric cars, you're probably not going to have a whole bunch of maintenance and so on and so forth to really consider, right? So you probably want to, but it just like you said, it just depends. It's a variable situation, right?
Right. And what
Okay,
your warranty is, some cars have better warranties than others, some manufacturers offer better warranties than others. So you really have to look at the whole picture.
got it. What do you think? Have you had those circumstances yet where you've seen a company have about 5 different electric cars? They're going all electric for their business now.
Um,
Um,
yeah, I haven't had that circumstance yet, but
okay,
I'm sure that could be a frustrating thing if you are going all electric and you have more than 5 vehicles. So you'd probably want to start tracking if you have that many vehicles and you are charging them. You might want to make sure that you're putting a meter on how much you're charging for those vehicles, or
got it
have them charging at your shop or something so that you can still write off that electricity.
for sure. Okay. This one's a big deal as well, and it is the Uber, Lyft, DoorDash, or other drivers out here because that's a whole nother business model, and it's become part of our, it's become a mainstream business for a lot of folks. Talk to us about how this works out now and how the IRS looks at this particular SIC code, if you will.
Right. So you're usually using your personal vehicle to drive others around or food or, doing some sort of delivery service. So I always recommend that the first year that you're doing it to keep track of both.
Okay.
So that way you can kind of look at how much you think you're going to spend and then look at, how long you plan on doing this for. If this is going to be a regular thing or if you're just doing it for a little bit to like have extra money. So you might want to look at all those different factors before you make a decision. One of the other things is that most of them require you keep your vehicle a certain way. So going to the car wash on a regular
Mm,
basis,
yes.
vacuuming, shampooing, like all of those type of things that have to happen. Those can all be deductible. because that's part of your business model. So making sure you're keeping track of all of those little things too, because they can add up quickly.
Okay. With the Lyft and Uber and DoorDash and so on and so forth, have you noticed a trend in people claiming actual versus mileage? It almost seems to me, and I'm not making this as a suggestion as to what people should do. Make sure that you talk to your accountant as we're just talking about just, thoughts and suggestions, but again, make sure. But do you feel like because they're driving around so much that mileage is probably the way to go? But because of their amount of driving, they probably do run into a lot of maintenance.
Yeah. So mileage is what most of them I found typically do use. And a lot of them are using the mileage on the app. The problem with using the mileage from the app is that it's usually only calculating between riders. It's not always calculating all the other miles that you're driving. So you definitely want to be careful and make sure that you're keeping track through a different app or actually logging everything so that way you're making sure that your mileage is correct. I don't see a lot of people taking actual on this unless this is their full business. And then I would, recommend looking at both scenarios to see which one is better for you. You always have to take into consideration how old the vehicle is, all of those different factors and what type of vehicle it is. So those could be different things that you take into account when you're trying to decide which one's best for you.
That's fair. Okay. All right. In this one here, either method, and your suggestion is always talk to your accountant about which method is best for you. So take us down this pathway here, Victoria.
Yeah. So having that conversation with your accountant about which one you should choose, especially when you're first starting out, is a great idea because they're going to ask you questions that you might not have thought of. And they're also going to know like how we're going to depreciate and what you're going to be able to claim each year. So it's a good idea to talk with your accountant so that you guys can come up with the best plan. What might be great for this year may not help you next year. So sometimes it's always good to like not look at just this year, but look at the long-term effect of your choice.
Okay. Which brings me to this. So you can choose to do one vehicle actual and another mileage. So when do you find that scenario is this when you have a fleet of vehicles? And this is, you have to be so accurate on your conversation if you're going to talk to your accountant to make sure you have a specific claim that you're going to have. So this one is actual, this one is mileage. How are you presenting this to your accountant as far as you're a business owner? How are you presenting this to your accountant to say, should this one be actual mileage? How does that work?
So you want to look at what your actual expenses are and what your mileage is and compare them. And then you're looking at what is best for the business, not just for that year, but for long term, so that you're making the wisest choice based on the information you currently have. When you have more than one vehicle that you're maybe using for the business, let's say that one spouse has a W-2 job and one spouse is running their own business. But sometimes their spouse is running around doing errands for them, maybe going to the bank, maybe sometimes going to pick up supplies. You're maybe using the one vehicle full time for the business, but when your spouse is driving their vehicle and running and maybe getting you supplies and going to the bank and those type of errands for you, you could take mileage on their vehicle. So you can have two different vehicles that you're taking one actual and one mileage because the spouse's vehicle is not full time for the business. So that would be a great time to take that mileage instead of the actual expenses.
Interesting. So then when you're putting this on your taxes, are you saying my BMW is actual and my Mercedes is mileage? Just to name a couple of cars, but nonetheless, is that how you're putting it on your taxes in order to make sure that's accounted correctly?
Depends on what type of business you have, what type of entity selection you've chosen.
Right.
That's why it's a good idea to speak to your accountant.
Gotcha. You had brought up a dentist earlier, and I wanted to bring this up because that dentist is going from point A to point B, and they're sitting there all day. Now, if they have an admin assistant, which typically they do, and they go out and run errands and go get stuff for the office and whatnot. Is that considered? Can that office admin write that off herself, or his or herself?
Right. So a W-2 employee can't do any write-offs. The best way
Okay.
to account for that mileage would be for the employee to keep track of the mileage and then the owner to reimburse them for the mileage.
Oh,
Um,
okay.
that is tax-free to your employees if you're reimbursing them, but they have to keep a mileage log and you have to show that, those were the miles that they drove. So in that fact, you can give them that expense back and then you're claiming it on your side. So it does work out well if you're going to reimburse employees for mileage. Just make sure that you guys are keeping a log.
Got it. All right. This is another thing, and I know we had talked about this earlier, but if you have 5 or more vehicles, you have to do actual expenses.
Right.
To me, I feel like this is where some business owners with that type of infrastructure, maybe an electrician or so on and so forth, you got your vehicles out there. You're trying to claim mileage because obviously you have all these trucks running back and forth and going to homes and doing jobs, and you're trying to get the most bang for your buck. But you're saying that the IRS wants you to do actual only.
Right.
Okay.
That's one of the rules is that if you have 5 or more, you have to do actual. You don't really have a choice.
Got it. All right, electricians. All right, people with fleets, you don't have a choice. I'm sorry. We can't do anything for you. No, that's fair. So then with this show, with the actual versus mileage, again, I think it's one of those things that to me as business owners, we tend to not really focus on actual mileage and think it's a big deal, but this is a fairly big deduction. How do you want people to proceed going forward with this, Victoria?
Yeah, I mean, whatever you've already chosen, you pretty much have to stick with it. But when you do get a new vehicle, or if this is your first year in business or your first year having a newer vehicle, then I definitely recommend going through and figuring out both methods. And then looking at the long term, whether you're planning on keeping this vehicle, there can be a lot of different factors. And that's why it's good to sit down with your accountant and kind of discuss those different factors so that you guys can pick what method is going to help you, not just this year, but long term down the road. So make sure that you're keeping track of both.
That's fair. That's fair. And as always, Victoria, I do appreciate this information. What attracted me to this particular conversation is not only did you think it was important, so that's why we did it, of course, but nonetheless, when I was able to really process and think about this, I know me as a business owner, because I don't drive as much as I used to, this is one of those things that just kind of goes out of my head, and I'm just like, well, I just have to eat the bullet on this one this year or these years going forward.
Your calendar and double check, like the different meetings that you've had, and then figure out your mileage from that. So that would be my recommendation. If you haven't been keeping track of your mileage, go back through your calendar, go back through, your apps and see where you've driven to for business. If you've been using an app to do that, you can kind of go back and figure out a good idea of what you've been driving. So That's my recommendation.
That's fair. And that's exactly what I want everybody to see in this show is that don't take this lightly. Just because it seems like a small thing, don't take it lightly, because you probably will be surprised at the end of the year, maybe at some of your driving. And ultimately, as she was talking about earlier, keep that log in your app. It's right there on your phone. Make sure you're keeping track and just being, keeping all your ducks in a row. So again, I thank you for making sure that this is relevant for us as business owners and making sure we're sticking to the accuracy and detail that we need to. As always, thank you, Victoria.
You're welcome.
We'll see you at the beginning of the year.
Sounds great.
All right. Thank you. We'll see you next time.
You too.
All right.
Bye.
And so business owners, thank you again for taking your time out of your schedule to watch the show, watch this program, to figure out where Victoria sits with this conversation as far as actual versus mileage. As we had spoken about before, in a lot of our shows, sometimes it's just a positioning. Sometimes it's just being accurate. Those are the two nuggets I want everybody to pull out this show is be positioned and also be accurate with your books and what you're writing off. don't take for granted the fact that mileage may not be a top priority in your day-to-day, because again, you're starting to set a track record on other things within your business model that are priorities, but you slip in one area, you start to slip in another area. So again, business owners, let's take each and every one of Victoria's shows seriously, because again, there's a lot of detail in which we can utilize and make sure that we're presenting ourselves accurately in front of the IRS, accurately for our books, and for us as business owners. Thank you so much for being here. But Victoria and I, we actually have to get back to work. So we'll see you next time.